discussions today. The first in line is on SME funding, the changing face of SME financing. Let me now introduce you to the respected panel members of this panel discussion. I'm going to request all our panel members to kindly come on the stage as I announce their names. We have with us Mr. Krishna Singh, Founder, Chairman and Managing Director, Global Space Technologies Private Limited. Can we have a round of applause? Our next panelist is Mr. Orko Bhattacharya, Co-Founder, ePay Later. Mr. Orko Bhattacharya, come on ladies and gentlemen, can we have a huge round of applause? Sir, please take your seat. Next, we have with us Mr. Neerav Choksi, Co-Founder and CEO, Credible. We also have Mr. Lawrence Albert, Managing Director, LA Technologies Private Limited. Our next panelist is Mr. Dhawan Shah, Country Head, SME Yes Bank. We also have Mr. Amit Mande, Chief Revenue Officer, URGO Capital. And to moderate the panel discussion, may I request Mr. Manish Arora, Chief Executive Officer, Karat Solutions LLP, to kindly come on stage and take charge. Can we have a huge round of applause for all our esteemed guests today? Mr. Arora, over to you. So you can even take the...
Welcome to all of you, and thanks for all of you to make it for this session. It's very elite panel we have. We have got people from all backgrounds. We have got bankers. They are also from various backgrounds, including micro, small, medium, all bank. They understand all the segments of SME banking. We have got people who are themselves industrialists in this panel. I think we should have a brief round of introduction before we move, for panel discussions. Over to you, Arko.
Yeah, hi everyone. I'm one of the founders of a company called ePay Later. We are an embedded finance solution providing working capital to MSMEs, and that too at zero cost.
Good morning, everyone. So thanks, TV, for having me. I'm Krishna Singh. I run a company called Global Space Technologies. We are a tech company and digital enablement company. So, of course, we started as an SME, and currently we are a BSE listed company through an SME route. So, thanks for having me here. Thank you very much.
Thanks.
Hi, good morning, everyone. My name is Neerav Choksi. I'm the co-founder and CEO of Credible. Credible is a working capital tech platform focused on enabling working capital financing for large, medium, and SMEs in India.
Morning, everybody. I think sitting among this all fintech and digital guys, I still come from the traditional industry called banking. I had the SME finance division for Yes Bank. Been part of banking for almost about 25 years now. Thank you.
Good morning, everyone. Myself, Lawrence Albert, founder and MD of LA Technologies. We are in the space of cybersecurity, data center implementation, network implementation, and majorly work similar to what a Wipro does. Thank you.
Good morning, everybody. I'm Amit Mande, Chief Revenue Officer for UGrow Capital. UGrow Capital is an MSME and SME lending organization or other institution, and we focus on delivering credit to the last mile backed by data and technology. So we are in the midst of the fintechs and the banks trying to take the credit to the last mile. Thank you.
Thanks, everyone. And I want to thank Arun for setting up the context so well. Actually, it is a great segue to our session, and being the first session and followed by your session, I think we have got the entire background of what we are, actually going to discuss in this session. So I want to go to Lawrence first. So Lawrence, the SME importance is very well, I think, landscaped by Arun. in the current context, when we are talking in 2022, we are in the end of 2022, what is the importance of, SME you believe in this situation where we are aspiring to, become a large economy like 5 trillion economy, and we always believe that SMEs contribute already 1/3, and we have an aspiration to go 1/5, over 50% of that contribution should come through SMEs. So what do you comprehend at your level, as a manufacturer, as a service enterprise then yourself?
A bit about enterprise. So basically, as an SME, we undertake a course of action to generate profitability from the enterprise. These days, we as SME are better geared to provide quality of service, sustainable business model, in terms of ICT applications, implementation for large customers. That is one. When we talked about the computer age, it was a privileged few like the IBM, the data dimensions. All these guys had the access to knowledge, technology, resources, and funds. And they were driving the global economy. With the advent of your internet age, we had companies like your Wipros, your TCS, your Infosys, which came on to the large being of the next business hub. With information age, with this, which happened some 5 years and 10 years back, we SMEs at this point of a time are with experience, with knowledge availability, with information availability, with resources and funds available at our disposals, with the funding agency. I think we are able to not only compete with any of these global enterprises, but we are at par or better in terms of services, so in terms of service offerings. One global conglomerate would need nothing less than 1,000 SMEs, to deliver their services in terms of channel partners, value-added resellers, distribution house, media house, logistic companies. So we SMEs are one of a core for any of a single large conglomerate in terms of functionality. And with the growing knowledge of any of these global enterprise to be lean in terms of staying profitable, the advantage for we as a technology SME companies are far there and to stay and be relevant and be profitable. A small example about ourselves, we have been there in the industry for over a decade, and we were more giving services in terms of most of the technology offerings which were offered by large competitions to us. We downsized our technology offering to certain niche products in terms of managed services, in terms of cybersecurity, in terms of deployment to large banks. 5 years back, our revenue was around about 35 crores and 45 people as a resource. Today, we are 120 crores, present in 7 countries, and not only servicing to Indian enterprise MNCs, but servicing to global enterprise. So I think the need for SMEs to ensure we grow the business is pretty much there, and it is the customers who are looking to have services availed of, nimble, agile, customer-centric SME partners like us. One more story that is getting much stronger for the SMEs these days, with consortiums, with collaborations of regional niche SMEs, we are able to not only address global projects, but able to displace global partners at some point of a time. So I think reaching that 5 trillion kind of a story is not a story, it's not a dream. That could be realizable with certain more incentives given to the SMEs. That's all from me. Thank you.
Thanks, Lawrence. I think it's a great, lay down of the path which you have shared with, I think, most of the people over here who wants to grow well in service sector especially. But that gives me, next, my panelist, Krishna Singh, while we could get a lot of inputs from Lawrence on service enterprise, how they can grow and, they can be part of the large value chain and they can become the large exporter as he has become. But what are the sectors you believe which are actually very, right segment for SMEs to focus upon? not only for domestic growth, but also for export orientation. Service is definitely one, which we know, but we want to hear beyond service sectors which are the sectors to focus upon.
So, I think it's very interesting, and I mean, if we have to name sectors, I think if we bifurcate services further down, I think there are many things where we can do exceedingly well. But with your permission, I would like to maybe put little light to the data which we were exposed in the morning by Arun. So I was pretty impressed with, we didn't news, but then there was some data points which came out which kind of really caught my attention. And one of that was that in India we have so many micro enterprises, and then transition from micro to I would say small and medium enterprise, which is where we are an outlier compared to the global scenario. And I was just kind of thinking, sitting there, that what could be the possible reason. And see, all of us started as a micro enterprise. Today, if you see, one good thing in our country is that it's a wave of entrepreneurship. People want to be entrepreneurs. There are many first generation entrepreneurs, which was definitely not there maybe even 10, 15 years back. So there's a wave which is coming wherein you have a lot of small enterprises or micro enterprises coming up, and they need to move on to become a small and medium enterprise. And while just keeping my journey in mind and how we have transitioned, and probably we were lucky at times to be able to secure some funding at the right point in time, but then when I look at it from a larger perspective, I think here we have a framework approach. So there is a framework which banking ecosystem has put in, and you got to fit into that framework. If you want to get a formal sector funding, or you have a VC ecosystem or a private ecosystem, where definitely it works very differently. Even we could never crack that, and the things are different. But coming back to enterprise which is out there to secure public sector banking funding, or for that matter formal funding, I think that framework is something which needs to evolve, and the mindset needs to evolve in the sense, see, it can be cash flow based, it can be asset based, but why can't it be an idea based also? Why can't, see, today we don't have an ecosystem which supports idea, which supports innovation. See, you can create a you can transition a micro enterprise to a small enterprise based on push. But if you have a winning idea, it's a matter of time when the micro becomes mega. And that is where I think the whole ecosystem seems to be probably, so it's easier said than done. You got to really overhaul your whole system, because the bankers need to understand. I mean, and for that you need a very, very different kind of a ecosystem. So that's one thing which I thought I'll put across, that can one think of funding which is beyond your traditional evolution method or a framework method, and get into a segment which is a very serious segment. So see, I have traveled to other countries, and we see how smaller companies are grown, and they are made into a mega enterprises.
Got it.
That is something which we need to look at.
Thanks.
Sorry, I slightly deviated.
No problem, but you have given a very good segue to the next panelist, which is Amit Mande. Amit, I think we got cash flow based lending approach, we got asset based lending approach, and now here comes the idea of idea based lending approach, which naturally cannot be done by traditional lenders unless or until it is supported by a lot of government schemes and government subsidies around it. And naturally, there are a lot of regulatory reforms happening around the country. So you believe the reforms which have happened, through government intervention and regulatory intervention, especially around data access. I think data is one, engine which can actually look at cash flow based lending, of course. But I think can we look at extending data to idea based is one thing I want to ask you. But generally, you can share your thoughts around, how can data be the center point or pivotal point for giving data, great access to SMEs.
No, so rightly said, Manish, is that collateral-based lending, the traditional forms of lending, has its own limitations when it comes to SMEs, MSMEs. There is limited collateral. There is not perfect collateral. Cash flow-based lending is what everybody is moving to, the new age lenders are moving to. But for cash flow-based lending, the problem always has been availability of data on which cash flows can be assessed. What we've seen over the last 5, 7, 10 years is really a complete transition of this country in terms of its ecosystems that the government and the regulators are really pushing to democratize data. First came the India stack. Don't need to talk more about it, but the identity stack, the payment stack, and then of course the data layer through the GST. GST has been a complete revolutionary about it, and every day more and more MSMEs are jumping on the bandwagon to ensure that there is more transparency and there is more data availability. The second piece that's also happening that the government and the regulator is pushing is the account aggregator network. The consent artifact and the account aggregator network will allow people like us, people like lenders, the new age lenders to really access not only banking, GST, but multiple forms of data just on one consent. And then risk models can be developed. What we saw post-COVID was also a strong move by the government in terms of an emergency credit line. The only sector where the government intervened post the pandemic was the MSME sector and extended the emergency credit line. No other sector, no consumer got it, no large corporate got it, the MSME got it. That's the importance of the sector, and those are the steps on by the government. But and as we progress, we discussed about OCIN. The OCIN protocol is really going to democratize data for all lenders. So the steps taken by the government are unheard of in last 7 years. They are moving at a very fast pace. What is left to the lenders and the MSMEs is to really adapt to these ecosystems. You can't be away from the ecosystem and expect the benefits. So I think that is the government and the regulator, the forward-looking regulator, has obviously been very, very helpful, and the steps are very visible.
Thanks, Amit. I think this leaves us, to Neerav, who is running a fintech himself. So much has been done on government regulator, which has been already, very nicely detailed out by Amit. Do you think there is a scope of doing something more beyond OCAN, beyond, India stack, beyond, now online digital commerce is also coming in. So what else you believe that regulator or government should do beyond this?
Well, if you had asked me this question 5 years ago, I would never have dreamt that the government would do what it's done. So I think they've taken all the steps in the right direction. A big next step is adoption. And I think that's really important. So we have issues like PSPs not coming on board, account aggregators today. So I think those things need to be transformed. You have a lot of public sector on trades, but the private sector has not yet taken on, right? So I think the adoption is going to remain a key challenge. Fundamentally, I think SMEs, and Arun rightly said this, that a lot of SMEs are not aware of the benefits and the schemes that the government has come up with. And I think there is a need to create that learning within the SME ecosystem. But if you were to ask me something futuristic, I think one challenge that most lenders are concerned about is their ability to collect. And I think that's one area that we are trying to work with the government to figure out a way to democratize, like they've done the account aggregator network. So I think if we can find a solution to collect effectively, and if you're talking about working capital, those collections come from your buyers. Trades is one way to do it, but can you do it in ways that can secure the lender? I think that's a very interesting idea. So that's one area that... Got it.
I think that's a very important piece you have brought in. Financing is easy, but collecting is when, actually the cycle becomes a, fresh cycle of growth starts when you are able to collect whatever you have, lent it to. So very important the point you brought in, Neerav. But overall, I want to go to, you want to say something?
Sorry, one last thing. I think we talk a lot about, post facto financing. So there is a lot of opportunity. Trades is post facto, right? But
Post-shipment, yeah.
Post-shipment. So, but imagine a situation where you want to create growth for the SME, where he needs, or the SME needs money when he gets an order. And I think pre-shipment financing in this country has still not taken off. So I think that's another area that is really important for us to drive growth within the SME, MSME segment.
Got it, Neerav. I think adoption of whatever has happened, awareness of whatever has happened, and I think pre-shipment financing is something which is what Neerav believes is important. That makes me move towards Dhawan. So Dhawan, all this has been detailed out, that what is that government has done, what is that data is doing, what is that new technology is doing in terms of financing. But still SMEs are still having lack of finance, as even Arun also pointed out. It still is the number one, number two reason always. So do you believe there are still a lot of challenges which SMEs are facing in availing these financing options or opportunities which are available to them?
So Manish, from two perspectives, both the lender and the SME perspective, right? Yes. Are there challenges? Yes, I think there are a reasonable number of challenges or the headwinds as we look at. Especially the whole sector has gone through the turbulent time, right from demonetization and GST and the COVID, right? And I think there's some good outcome of that we have seen in terms of what is the highest stress this sector can take, right, or the lender can take. I think it's possibly one of the best stress test modeling, if I were to say, I think has happened in the COVID period. And we have seen the resilience of a lot of SMEs who were conservative in terms of their financing model themselves. There are people who have not availed moratorium. There are people who have not even gone for ECLGS and are doing fantastically well, right? So having said that, I think there are a couple of things that the SMEs need to look at. Is eventually any form of borrowing that you look at in the digital space or the traditional lending or the quantum of lending that you look at. Adoption of technology or the data is going to be key, right? How transparent the information is available, how easily that information is available. Second is the lack of awareness of various government schemes, right? From the very traditional model that we had years back, if I were to go back to 30, 40 years back, you had the SSI reservation list of the exclusive list of what only they can produce. Some form of government support in the form of state finance corporations and the GIDCs and MIDCs of the world. I think that was all about MSME at that point in time. Things have evolved a lot in terms of what government is trying to do in terms of identifying pockets where they have the schemes now for the traditional industries that they want to grow. Trying to do something with the women and the young entrepreneurs, because that's the aspiring class of India where the potentials are growing. And there are a couple of schemes which are sort of floating around it. But unless you embrace the change which is coming, unless you go for new technology, unless you go for upgradation of your skill set, unless you change your own mindset to grow out of your own reservation of how much you want to grow out of, and hence grow from micro to small and small to medium, I think that's more of an internal challenge, right? So when I look at, technically startups are also an MSME. It's just that they are in the technology or the digital space. But look at the working culture they have been able to build, right? And hence the phenomenal growth, people's ability to, or the willingness to fund them, the kind of money that we talk about. That's not what is happening with the traditional industry, right? So I think there is an internal change which is required for you to grow out of your own understanding of your businesses, better understanding of markets, products, pricing, marketing abilities, adopt skill set, right? If you want to remain a family-driven institution and you want to control everything, I think that's a limiting factor that you are creating for yourself, right? But the moment you invest in people, moment you invest in technology, moment you invest in skill set, change the culture, the way you work, I think there are immense opportunity to go out and get a lot more funding from the market.
Got it. I think very important points which Dhaval brought it. I think change starts from yourself. I think that's a very important point, that unless or until you don't decide to change, things won't change. So it has to start from home. But that is good for, maybe small, medium enterprises, startups which are, especially the technology startups, there are youngsters which are joining the, the bandwagon of becoming an entrepreneur, and they are quite aware of, schemes and all that. So they are part of Startup India. They are part of the ecosystem which supports them. They are part of incubator and all that. That's good for them. But what about the people who are actually in the deeper geographies? What are the people who are starting, very day-to-day livelihood kind of businesses, right? They are not businesses which are new businesses, new age businesses. They are very traditional businesses. They are being operated from a very small, in capital, and they are in the deeper geography. So I want to go back to Orko in this respect. These are the people who actually I believe have to be part of this chain of financial inclusion, so we call it. How can we bring them up to the curve which we are discussing over here? We are discussing large items over here, but what about those people, grassroots businesses from small towns?
Yeah, absolutely. So I think so financial inclusion is actually a broad term, and if we talk in terms of credit, a lot of these initiatives that are happening that Amit and Nirav both covered are helping in the financial inclusion because as they mentioned, data is central for us to give any sort of credit to these MSMEs. I'll just take an example from our own company how financial inclusion happens. Now, we fund the kiranas or the small stores when they're buying from their distributors or their suppliers. Now what it does for them is that all those dealings that were so far happening in cash start to get recorded in the system. A track record starts to get, a record starts to be built in systems like CIBIL, in their bank accounts, etc. And I think the way this change can happen, especially in the grassroots, is that internet right now is very pervasive. I think that has to be used to the hilt. A lot of people are able to disintermediate because internet now is in their hands through the mobile phone. So I think from the government initiatives, if we look at what all more can be done from a financial inclusion perspective, is that, of course, mobile-led tech has to take precedence. And right now, for example, UPI is there, the Jan Dhan bank accounts are there. They have allowed people to access their bank accounts on their mobile phones. So that's a great thing that's happening. And these guys, the guys in the hinterland, are very attuned to mobile phones. If you look at their Facebook accounts, if you look at their TikToks and everything, they're very attuned to using the mobile device. I think the next step is to create some sort of financial literacy also there, and also use that device to provide financial services more and more. So that could lead to a further financial inclusion.
Thanks, Orko. I think it's a great tool, to have smartphone with you and being logged on to Facebook and all that. And so social footprints are already there. You are saying the footprints of business also can be done, with initiative like you are taking in your company. Great. So I think we have heard, finances and talking about how regulator is, can do some changes and how bankers can do changes in terms of financial inclusion and, credit penetration. Let me move back to Lawrence. Lawrence, this is, let's assume that finance is done now. We have discussed that about, but as pointed out, that by Dhaval, that the change has to start from, the SME itself. They have to become competitive, right? So they have to be in that arena in which they have to make sure that they stand out and they generate demand by having good product, good service they offer, right? So unless you don't have good product, unless you don't have good service to offer, this is all theoretical, right? You have to find buyers, you have to find suppliers, for making sure that you get good product or service in the marketplace. So what do you think? What should what is that incentive which is needed for these SMEs to come with innovative products so that they can find marketplace to and naturally then financing is outcome of all that, right?
Thanks for the question. I will like to break it down into two pieces. One is product innovation itself and incentivization, which happens either by institutions or by governments. When we talk about any product, see, product is a finished goods which comes with features, benefits, cost saving, ROI, and which could be traded in terms of getting profitability to any organizations. So these are developed finished goods, okay, which comes with all their features. When we talk about product innovation, these are product under development, which only talks about either their features, their functionalities or benefits, which cannot be showcased, but it could be done, demonstrated as a proof of concept, okay. On this stage, we had the debts, okay, the angel funds which comes in place, the seed fund which comes in place as a support to get it productized from a concept and to take it to the market. So getting a finished good from a concept to a product is pretty much possible for an SME if they have the right kind of a need, which demand in the market. There is a marketplace. There are disruptive technologies which people would want to take to. Okay, that is where we can get it to a localized market, to a regional market, and to a global market. And in terms of incentivizing these product innovations, developments, there are a lot of government schemes, institutional programs which are run at this point of a time. Government, for example, for export-oriented product services, we have duty benefits, okay, we have custom exemptions, we have a lot of tax rebates, tax exemptions, subsidies which are given through schemes and programs run through governments, which we SME should be apprised of. That is one. But on a personal level, typical SME challenges are in terms of finding the right resource who could be retained in terms of product development on a longer range, which is one of a key challenge in terms of SMEs that we face. And the second is whether we should be investing our business generated funds in terms of running the business or putting it as a capital expenditure. These are the two challenges that we as an SME face, because for us, we are a risk mitigation factor for OEMs and distributors because our payment is net 0 or net 30. But the payment recollection cycle from the customers, usually they talk about 30 days net, but by the time we realize it into an account, it happens to be either 60 or 90 days, which is a large challenge for SMEs like us to have that, rotation of funds, how fast and how quick and how many times we rotate the fund gives value in terms of profitability to our business. So I think SMEs should be incentivized in terms of companies which are into product innovations. Employees should get some tax benefits in terms of they are retained with these product innovation companies of SMEs, rather than getting absorbed by large competition, global competition, because they end up paying either double or triple, which we cannot hold back. That is one. When we are doing export services, ideally there is double taxation. We end up paying taxes into that particular country, and when we get back the funds in terms of dividends or profitability, we end up paying taxes here. So again, that should be looked for something in terms of SME. That is second. Third is we need to have a lot of incubation centers, which is wholly funded by institutions. One of the key challenges we SME here would face is again running funds, where we have incubation centers in terms of innovation labs, which is completely funded. We are not concerned that we need to divert our business capex into innovations and R&D, because for us R&D is, though it is objective driven, we really don't know how much funds it is going to take in. So that could be something that institutions, government can look at.
Got it.
And I think from an
I think it covers, I think, quite a gamut of things on the platter of SME. And we know SMEs are run by a very skeleton management, mostly run by families, right? It's basically father, son, or close family members who are running this enterprise. I think whatever you have laid down, calls for a lot of management bandwidth, a lot of capabilities to be built up by SMEs, and that is where I think a banker like Dhawan should come into play. That this is too much of an ask, from MSME, to right from product innovation to taxation. He talks about, retaining the manpower, resources management and all that. I think it's too much of an ask, on the platter of any SME. It's big ask for corporate also, but for SME, I think it's a big ask. So what do you think, how SMEs actually can develop these capabilities and further naturally after these capabilities are there, he has to keep on, developing the product, and naturally it will call for investments, it will call for debt raising, it will call for, diversifying and naturally, putting money for expansion of plant or machinery and all that. So these are major hurdles. What do you think, Dhawan?
I wouldn't call it hurdles, Manish, because this is the most passionate class of people you have in the country, which is MSME, right? You do it not because you want to, win the bread for the day. I think you do it because you are passionate about an idea, about running a business. Obviously, not so to say reporting to anybody in a corporate hierarchy, right? You want to be on your own, and you have an idea, you want to work on it, and you want to grow. So anything if you have to do to grow, I don't think it's ever a hurdle, right? I think it's more about identifying what I need to do, what more do I learn from here on to be able to grow out from my own shell or my own restriction, right? I think there is lot available in terms of trying out new ideas, new thinking, new markets, new geographies, new products. So one is a caution from should not try to move too fast that you are not able to catch up the pace with, right? Do not try to sort of, you have a golden goose, which is a running company trying to get you enough money to survive and grow in life. But don't try to venture into something new which kills the very basic that you have, right? So sometimes that over leveraging or trying to move too fast or expand too wider is what sort of creates the hurdles, right? But my sense is at a fundamental level, if you take care of your people as an employee, if you build a good culture, if you focus on quality of a product because consumers are demanding, we ourselves as an individual, what we were expecting from any service entity, whether it's a telecom company or a banker or anybody, our own expectation has gone through a tremendous amount of change, right? The Amazon has treated us, sort of told us what is a consumer experience is.
Pampered.
And you have to just move with that world, embrace technology, embrace good set of culture in your institution. There is nothing difficult to do.
Great.
Right? There are more than enough lenders available in the market to support a good idea. Provided you are convinced about what you are trying to do, I think the world is limitless.
Thanks. That's a lot of encouragement, I think, for the people in the room. And why not, Amit, you add to it? Do you think anything more on this topic?
Just if I can sort of interrupt, just wanted to share an experience how it works, right? So I was in MP last week and trying to meet a lot of industries, and I went through a branch which is a rural branch from a banking perspective. It's there for about 4 years, and I asked them, what is the best business you have done so far? So he told me, sir, I have a 35 crore book of affordable home loan, right? So now, branch in an industrial location, and you assume that he will talk about SME lending, current account and all that. The first answer which came was, the best business I've done is an affordable home loan. And I said, how did you manage it? So he said, we reached out to all these companies here. Most of these are workers which are migrant from UP and other locations. I think we could convince them because these are while low wages, 10,000-15,000 earning a month. But they could convince them to open the salary account, so make them bankable in the first place, right? And that's a great job the entrepreneur has done to convince the workers that why you should have a bank account, right? On the strength of that, they've been able to provide the affordable home loans of 7 lakh, 8 lakh, 10 lakh ticket size.
Super.
Now that set of people are going to be with that entrepreneur for a long time for sure, right? That's how you build stickiness in your own business model and the kind of people that you work with. You can't get a better blessing than your people supporting you for a lifetime, right?
You have actually got the skill set, you've got the employees, you have got the retention problem,
Absolutely.
Everything solved at one go.
The guy has his own home, so he's not going to run away.
Yeah. It's,
Right.
I think
So that's how it works. Thank you.
great. I think that's great empathy by that team of that branch who could relate and get this done. Anything you want to add, Amit, in this? How to face this?
So I just heard Dhawan saying, don't kill the golden goose when you start something new. And let's go back to a smaller setup, a small medical store in Bhopal or a smaller town wanting to start something new. It's as good as the idea funding than the collateral funding. But that person doesn't have angel funding, that person doesn't have any venture capitalists coming and supporting him. So when these people diversify, I think what they need to ensure, there are a couple of things, I think, as we call ourselves new age, technology savvy, I think they have to adopt to the whole new environment of multiple ecosystems. There is a credible ecosystem, there's an e-pay later ecosystem where they jump on, ensure that their payments come through a certain route, their invoices get discounted through a certain route. They adopt the whole the e-banking story. Apart from that, jump on the government that market platforms. So there's this whole new ecosystem that has not been traditional. You want to diversify, there are only three things or four things that I caught from Mr. Singh's presentation: market access, funding, and productivity. And all these tools happen to be in these ecosystems that are available today. Jump on these ecosystems and eventually funding will come by its own way. So that's one. Two, it's extremely critical that and to his point, the small enterprise should not end up over leveraging yourself in this whole quest of wanting to diversify, start some new thing. So just two guidelines: adopt to the new ecosystems, adopt to make themselves new age, and second is don't over leverage. So that's one new thing that.
Great, I think that's a good addition to it. Coming back to you, Krishna, do you think government should do something to encourage R&D, because that is what was brought in by Lawrence, that you need to have product innovation cannot happen unless you do real R&D, right? And especially when you want to make it acceptable throughout the length and breadth of the country and also do exports. Do you think government should do something to encourage R&D for product innovation?
Sure, definitely. If they can come through, nothing like that. But I fundamentally believe that entrepreneurships, like whosoever is starting a business, who's having an idea, I think that's the fundamental, that you got to create your own product or value which will go into the market. And I think support is not required for that. I think that's the fundamental. What you really need, so my personal take on this is that entrepreneur would, like what affects me, primarily availability of funding, if I'm looking at it from an institution standpoint. Secondly, ease of doing business. If these two things are taken care of, I think entrepreneurs are supposed to solve all other problems. That's why we are entrepreneurs. So we are really not looking for anything else. Make the things life easy, and the rest of the things are going to be fine.
Thanks. Yeah. So I think that's what Krishna has brought in, that we have done a lot of ease of doing business in the country, and it's right. And we have discussed all the schemes and everything, literacy and everything we're discussing. But we saw from the Arun's presentation also that we are still lacking in, as compared to our global counterparts, in various parameters. So do you believe that, because the topic is around financial products and all that, SME financing, do you believe that our owners are actually having, compared to their global counterparts, why they are having this lack of, just because of the country's population is so huge, just because we don't have right distribution channels, bank correspondent, or what all channels you need to reach to make sure that actually all this whatever we discussed till now, actually the literacy which we talk about actually go to the SME. And Neerav, it is to you. How can we make sure that they come to the same level as our global counterparts in various parameters through literacy education, which is missing perhaps maybe in the deep tier of the.
Well, I don't know if there is a direct comparison between global counterparts and what's happening in India. I would compare India 10 years ago and India today. I think that's more relevant to where we are, if you think about it. I think what has shifted dramatically, and we spoke about all of this, is the digital infrastructure that the government has built. Now, this is the platform from where we can essentially take off. Now, I think people keep blaming banks are slow, financial institutions are slow. They're not actually. If you go and actually talk to the banks, there is a huge drive to create digital adoption within the bank, and to kind of build on these railroads that are already done. So that is why fintechs like us are doing well, because everyone started realizing that the big opportunity for us is to ride on this network and create inclusion, so to speak. And SMEs are not I'm probably not talking about tier 3 and tier 4, but there is a different approach to that. But I think SMEs who are in the top 35-40% of the SME bracket in India, they are extremely digitally savvy. I mean, they understand this space really well. Kirana stores are extremely digitally savvy. Otherwise, we would not have success stories like we have today, right? So I think it is not fair to say that we are not digitally literate. I think the challenge, of course, is the tier 3, tier 4 cities have still to penetrate there.
Orko, sorry, Neeraj, thanks. I think since I'm conscious of time. Orko, can you want to quickly add to it? Because you are dealing with same merchants which Neeraj spoke about.
Sure. So talking about distribution of financial services to MSMEs like Kirana stores, etc., I think there is a what you call a moat of trust that has to be crossed. Okay. The MSMEs are slow to trust new financial services, and any new idea in financial services coming from startups, etc., are adopted very slowly because they don't trust these guys. They trust their own communities, they trust the banks that are there. So I think the best way of distribution of financial products would be through their local ecosystems, through the banks. In fact, Mr. Dhawan gave a good example. I think the distribution of financial services, if we have to make it ubiquitous, it has to be done through the banks because they do have the branch network as well.
Got it. So I'm going back to Dhawan for the same purpose that you gave that example beautifully. But your same branch is now enabled by digital lending, which is what RBI has now given good 2nd September guidelines, gives a clear roadmap of, how the digital guidelines need to be delivered. And they sort of, bridge that gap of trust deficit which was there, and naturally Chinese app was spoiling the show earlier. So now this digital lending we believe that it is secured, safe, and RBI is governing it with the help of banks and NBFCs for sure. So do you think now we can perhaps come out with some innovative products, further innovative products basically, which can help us in better financial inclusion, ease of, doing lending through digital mode? So what are your thoughts about that?
Sure, Manish. So quickly, I think the way I look at the cascading effect, traditionally the hindrance to this is, apart from the process, collateral challenges and all, is about ability to do small ticket business, because the cost of doing business is unviable when you do in a physical environment, right? Pick up so many files, data, process it, and 3 people monitoring it. Obviously, it's not viable. Second is the access to deep geographies, right? Our ability to reach out to the last mile in the hinterland, obviously that has been a challenge. So between credit worthiness and the access, I think in a sequence of events, if you have to look at what good things have happened, with the adoption of QR codes, UPI, your payment collection getting digitized, right? On the strength of the data stake is what fintechs have tried to build as the model is a risk underwriting. Today, you can't think of it 5 years back that you will get a finance for 5 days as an SME, right? It was a standard working capital or a term loan as a component. Today, you get money for a specific purpose. Electricity bill करना है, funding मिलता है. 10,000 रुपए का funding चाहिए, 10 लाख रुपए का funding चाहिए, मिलता है. You want to do daily EMI, you want to do weekly EMI, you want to do monthly EMI, पैसा मिलता है, right? So as long as people are getting built into that ecosystem, I think the innovation scope, which fintechs as the first layer, building the credit algorithm, availability of use of data, and building beautiful models surrounding. At the back of it is obviously from a distribution and reach perspective is where the NBFCs are picking up the space faster to be able to support the fintechs in taking over the book part of it. And I think the third layer, which is now what, thankfully to RBI, what they have tried to build is the co-lending model. So while there are things which, even if I'm not able to reach directly, I can actually sit with the NBFC partner and get into a co-lending arrangement, right? So what my restriction of space, geography, distribution, small ticket monitoring, somebody is able to take care of it. Yeah. Somebody has given a beautiful idea of how to lend. Somebody is taking the call, and effectively I'm taking the risk reward sharing with the NBFC. My sense is they are, as Gango is saying, 50,000 crore is the incremental business they want to do in next financial year in the co-lending model.
Great.
My sense is SMEs are here to stay. Your 6% number sheet will change. And that's the data reflected in the growth in the SME financing at 16-17%, much higher than the corporate lending that you see nowadays.
Super. A lot of optimism in the room now. And I think this optimism should be carried by Amit Mande, because Amit Mande is the company is very clear that they want to make co-lending as the major way of strategy of doing business. So Amit, what are your thoughts on what Dhawan just pointed out?
Well captured, Dhawan. Very importantly, we look at it in terms of taking credit to the MSMEs, making it accessible, making it affordable. the accessibility and affordability was an issue because risk could not be evaluated, so it became unaffordable to them. Risk had to be evaluated on collateral, risk had to be evaluated on financial papers, which were really not transparent. Now there is the whole democratization of data that he spoke, the ability of the NBFCs to create risk models, and most importantly, the products that are required. Today, earlier if the MSME wanted to stock up for Diwali, he would have to take a three-year term loan. Today, because of this whole data democratization, risk models and ability and tech enablement, he can take a 90-day line, a 60-day line, and that's what the NBFCs are doing. So, very rightly said, the NBFCs are walking the path to go to the last mile. But the NBFCs are not the custodian of liquidity. The custodian of liquidity are the large banks and the large PSU banks and the private banks. So, of course, if on one side we believe, the NBFCs believe that their core competencies are reaching the customer, understanding customer, building the right models and building an agile tech stack. But we leave the liquidity custodians. We respect the liquidity custodians where they are, and we want to collaborate with them at UGRO, and therefore build a large co-lending model. At this point of time, 30% of our business comes from co-lending. So super, we appreciate these guys.
I think that we have spoken about banks bringing capital, NBFCs bringing distribution strengths, but there are fintechs, right? They are the bridge between both. The technology is which is encompassing everything. They are the ones who are connecting the dots between banks and NBFC also. So that leaves me with the final words from Orko and Nirav on this part, that while NBFCs and banks are reaching out and they are doing their bit, how can we make sure that interest of consumer, which is important, right? And you are the one as a fintech is making sure that data pull which is happening at your level, because you are the one who is interfacing in between consumer and banks and NBFCs. How the interest of that business community gets taken care of, the consent issues and all those things which we are discussing, and you can bring out any other issue which we believe you want to touch upon.
Let me be controversial here, right? I have always believed fintech should be regulated. I have always believed it, and that's one reason why from day one we've had an NBFC license and we've been a regulated entity. Because look, in the face of euphoria and growth, abuse is definitely going to happen. And unless you have strong corporate governance within the organization, unless you think of yourself as a seasoned professional more than just this passionate entrepreneur, you're not going to be able to change all of this. So I think fundamentally consent-based data sharing, being responsible for that data, being accountable to your customer, leave alone the regulator, I think that's really important. But look, for all the good things that fintechs do, there will always be some accidents and some exceptions, and it's a part of the growth game. But that doesn't give us the excuse of saying, hey, we are a fintech, so we can get away with anything. It doesn't. And I don't think, most of us don't think that way, I'm pretty sure.
That's a lot of assurance coming in from the man who's running a big fintech. And Orko, what about you? Because you also have faced the headwinds of the regulator coming in and playing their new guidelines and all that.
So I absolutely agree with him actually that we should be regulated. In fact, we also have our NBFC. We are also a regulated entity, and I think regulations are very important. Data privacy and protection, I think, is very, very important, because see, an example is Aadhaar. Initially the idea was that it will be like a social security ID for all the people, but now there are so many more restrictions on using that Aadhaar number by fintechs or NBFCs or banks that it might be defeating that purpose for which it was initially initiated. So a very strong and robust data protection is very needed for financial inclusion to take place, because at the end of the day, like Nirav mentioned, collections is a big issue, and one way to solve it would be to have all transactions of these customers linked to one ID. If that has to be done, then data security and data privacy is of supreme importance. And I think both of these go hand in hand.
Great. So I think we are changing face of the SMEs with all this, whatever we discussed, and we are in the right path. All eco partners, be it SME, ourselves, or be it fintechs, NBFCs, all are determined to make sure, Arun, your charts looks better. And I think this particular discussion gives us that clarity and gives us that confidence that we are on the right path and we should achieve our goal of contributing well as SMEs to the GDP and all the other parameters, be it employment or anything else. So thanks to all the panelists. Thanks to all my knowledge partners over here. Thanks a lot. Bye.
Thank you, gentlemen. Gentlemen, I'm going to request you all to stay back for a few more minutes, please. That was a lovely session. Thank you for sharing all those insights. I think everybody's over here is enjoying the session. Well, I'm going to request Dr. Arun Singh to kindly come up on the stage and felicitate our panelists with a token, please. Can we have a huge round of applause, please? I would request you to felicitate Mr. Manish Arora. Can we have a huge round of applause, please? Mr. Krishna Singh. Mr. Orko Bhattacharya. Come on, ladies and gentlemen, can we do better? Mr. Neerav Choksi. Thank you, gentlemen. Mr. Lawrence Albert. Mr. Dhawan Shah. Can we have a huge round of applause for all our lovely panelists? Thank you everyone. With that, we're going to move on to our next panel discussion. Our next panel discussion is on the role